Good afternoon, everyone, and welcome to our live payroll webinar. Today's subject is payroll compliance is ever changing. Every day is a school day is a phrase commonly used by payroll professionals. So my name is Yvonne Harper. I work within a payroll bureau for Benson Wood Chartered Accountants firm here in Airdrie. I'm an associate member of the Chartered Institute for Payroll Professionals and I have over 25 years payroll experience. So I'd like to thank everyone for joining me today. I will give a minute or two just to wait for those few others that are joining us. And whilst we're waiting, we'll move on to the next slide, Joe, please. I want to wish everybody a happy National Payroll Week. So this week is a celebration for payroll professionals. The Chartered Institute of Payroll Professionals established this week to give recognition to the industry for the important work that we carry out, mainly in the collection of tax, income tax and national insurance contributions, especially when you consider the fact that over £345 billion was paid to the government last year. It's a lot of money. So I'm going to start with some fun facts before we actually start the webinar whilst we're waiting on a couple more people joining us. So some fun facts: in 1966, the Beatles released the song Taxman to protest against the 95% super tax that they were paying. So I'm glad we don't pay that amount of tax these days. Well, I certainly don't. So the second one is the very first payroll has been traced back to 7000 BC, although perhaps not quite the payroll as we know it today. And according to ancient pay stubs, employees in Egypt and modern-day Iraq used to be paid in beer and other commodities. So before I begin, I'd like to draw your attention to the Q&A box at the bottom of your screen. So we will have a Q&A session at the end of our webinar. So if you have any questions throughout, please use the Q&A box and I'll come to them at the end. So I think that's everybody with us now. So let's begin. Next slide, Joe. So I want to start off by speaking with you about the pensions regulator and the importance of compliance. There are many things that employers have to do, and there's strict penalties to pay if you get it wrong. So all UK employers have duties to carry out depending on their particular circumstances. And it is important to understand what to do and when so that you can meet your automatic enrolment duties. So the duties start date, so this is also known as your staging date. So your legal duties start when your first member of staff starts working for you. So as employers, you must contribute 3% gross salary, while employees must contribute 5% from eligible eligible employees, if I could even speak. So the only exception is where a qualifying employee opts out of the scheme. However, they are required to be re-enrolled into the pension scheme every 3 years. So duties for employers do include the setup of a pension scheme, auto-enroll eligible staff, and deduct contributions through the payroll. So pay the pension contributions into a pension scheme. So the law requires contributions to be paid no later than the 22nd day of the following month from when you've deducted the pension contributions. So there's declaration of compliance and there's also redeclaration of compliance, and these returns must be filed by the deadline set by the pensions regulator. And employers will get notifications and reminder emails if particularly important to set up an email with the pensions regulator when you do that initial declaration of compliance. You want to be making sure all of those emails and reminder emails are coming through to you so that you don't forget, because penalties are severe, and we'll go on to that in a wee minute. So you will need to make an exemption declaration to the TPR even if you don't have employees. So this would be single director companies. So even though you yourself aren't eligible as such to to be included in auto enrolment, you certainly do have to make an exemption declaration just to the pension regulator to make sure that you won't be fined or penalised further down the line. And this is just your way of just letting them know that you are exempt from the duties. So the next stage would be once you've completed your declaration of compliance, every 3 years you want to be completing a redeclaration of compliance, and at that 3-yearly point, that's at that point, that's when you want to be re-auto enrolling any eligible members of staff that may have already opted out, or certainly new staff that's came in and came on board. Failure to meet these duties will result in strict penalties, and they range from a fixed £400 fixed penalty fee to a varying daily escalating penalty ranging from £50 to £10,000 per day. So this is serious that you get this right. So this is why I wanted to talk about this today, because the penalties are serious, and the pensions regulator are and have already closed over 500,000 cases to date. They do have an online list of employers and trustee fines. So, you may find if you did fail to comply and did get a penalty, you may find yourself on that list, which is published on their website. And these fines are being issued for not completing scheme returns, so your declaration or your redeclaration of compliance, remaining non-compliant, and also unpaid pension contributions. So it is important that you're continually making your pension contributions before the 22nd of the following month. So, as I say, director-only businesses have their duties also. So make sure that you're filling out that exemption form. This is a service that we do provide to alongside our payroll services. So by all means, please get in touch if you do feel that you are a bit overwhelmed by the thought of all this and you would like to pass on these duties to ourselves. We're more than happy to take on board your duties and your payroll. Okay, let's move on to the next slide. So this June, the employer's bulletin updates on the P45 guidance, they actually had an error in it. So in August bulletin, they rectified the error. So I just wanted to clarify the actual the proper guidance so that there was no confusion if anybody had read the June's update and hadn't managed to have a chance to read the August update. So when you take on a new employee, you want to be making sure that you've got all their correct address, their name, their address, their postcode, dates of birth, all of that. That's very relevant because the HMRC use the postcode to confirm addresses. So the postcode is actually a very important part of your New Start form. So you want to be making sure that you're getting all of this relevant information to submit your first full payment submission. When you get a New Start and they don't have a P45, then you want to make sure that you're completing or you're asking them to complete the HMRC starter checklist for PAYE. This is going to allow them to select the right box and make sure that you're getting them onto an initial tax code. Now, the change really is when you receive the P45 after the starter checklist, after you've used that starter checklist and you've made your first full payment submission and you've actually received a tax notification from HMRC. So you won't need to update the previous pay or tax or use the tax code that's on that P45. So you can actually just discard that unless there is student loan on details on that. You could use that, but I would expect that would have came through with the tax notification from HMRC. So it's just a little bit of a change, but just make sure that anybody that comes on board without a P45, you're getting them to complete that starter checklist and making that first full payment submission. You don't need to use the P45. It becomes slightly irrelevant. Okay, so let's move on to the next one. So all over the news is the cost of living crisis. We're not going a day without hearing this on the radio, on the news. So inflation hit double figures back in August, so it was at 10.3. Some forecasts suggesting it could climb as high as 18% over the winter. So this is a bit of a worry for all of us, and certainly it's a 40-year high. So we're in uncharted territories as far as I'm concerned, because I've not been working for over 40 years. So 1 in 5 workers do feel that their employer isn't doing enough to support their financial well-being, and we're seeing that every day on the radio news with all the strikes and everything that's going on. I would ask employers to consider reviewing your reward strategy, your financial well-being policy, benefit packages, if you have these in place. However, let's normalise conversation about money. It's so important that we don't have this taboo subject, and I think money is a taboo subject, and the worry that people have, and sometimes employers, maybe don't realise just how tight people are sailing to the wind. So the good news, I suppose, in one way, is 15% of organisations have paid their workers a cost of living bonus, which is great, but please consider, if you can afford to offer a cost of living bonus, please make sure that it doesn't inadvertently do more harm than good, particularly for those who claim universal credit or tax credits. Just something for the employers to think about, because it's all good and done said, and a cost of living bonus would be given in good intentions, but in actual fact it could cause problems. So it's just something that you want to be maybe speaking about with your employees, and see if there is other ways that you could support your staff. Okay, let's move on to the next slide, Jo. So the new living wage, the Living Wage Foundation normally have a review of the new living wage in November. Now, for this year, again, due to the cost of living and increases to inflation, they've decided to bring this forward to September, and they've just released the date. So it's going to be the 22nd of September that they're going to release the new living wage. Now, this isn't mandatory. The national minimum wage is mandatory. However, there are 10,000 accredited employers who are voluntarily paying the new living wage to their employees. So the rates currently are £9.90 across the UK, and in London the rates are £11.05. Now, that means that over 300,000 employees benefit from these pay rises. Employers should implement the pay rise as soon as possible. However, they do have up to the 14th of May next year to make these changes. So there is a bit of time, but obviously with the cost of living and everything that's going on, employers will be encouraged to make sure that they're given these pay increases sooner than later. There are current proposals for next year for the new living wage. So 2023, at this minute in time, they are talking about £10.32, so it may be going up to £10.32. However, they are looking at a range between £10.14 and £10.50. So it'll be interesting to see the change that's going to come on the 22nd of September, to see what that does with the 2023 changes. So it will be interesting, and we will be no doubt hanging on their every word come the 22nd, and we'll be getting ourselves all up to date with the new living wage once those figures are released. Okay, next slide, Joe. So HMRC, this is for employers only. Let me just stress that point, because HMRC are very much saying this is not for agents. So as a payroll bureau, we can't take anything to do with setting this up. However, HMRC have set up, or are setting up, from the 19th of September this year, what's called a new variable direct debit, and it's for the PAYE taxes. So the employers can sign up via the Pay Employers PAYE page, which is found on the gov.uk website. Funds will be taken once a return has been submitted. So once that direct debit's in place, when the payrolls run and you've completed the FPS, the full payment submission, or the employer payment submission, or even if you've ran your CIS, your construction industry scheme, the tax that would be due to be paid over, the apprenticeship levy, as well as the class 1A national insurance from your P11D. These will all be getting taken off of that direct debit, as well as what we would call an EYU, which is an earlier year update. So anything like that, any processes that you make to HMRC that's basically telling them that you owe them that tax and national insurance, they're going to be using that variable direct debit each month to take that money off of your bank account, and automatically. So it's, in a way, it'll be a good thing, but it'll be interesting to see the uptake on that, because if everything is going through and processed properly through your payroll, then it should be fairly straightforward. But it's HMRC that's setting it up, so I would like to think that it'll run smoothly, but time will tell. So we'll move on to the next one, Joe. We're coming quickly to the end of this, and I'm only halfway through my time, so I'll slow it down a wee touch. The HMRC have also introduced, or are also introducing, a new guidance tool on their website. So the Health and Social Care Levy was introduced back in the 6th of April this year. And what that did was it increased the employers class 1 and employees class 1 national insurance contributions by 1.25%. It was applied to employees, employers, and the self-employed individuals. So this impacted your normal national insurance contribution percentages by increasing it by the 1.25%. The contributions will be used to help fund the NHS and health and social care sector, which is obviously a good thing, and we all definitely see that a great need for financial support there. This is an increase for this year only when it comes to the national insurance. It's being applied just for this year to the national insurance contributions, and I've listed on there everything that's impacted and been applied to. However, from the 6th of April 23, the national insurance contribution rates will revert back to their 21-22 levels, and then the levy will then become a separate new tax. So you will still see it on your payslip. We had to put a little note on everybody's payslip this year that the 1.25% was coming off, and that it was to support the NHS health and social care funding. And most employees, if not all employees, would have seen that, because certainly as a payroll bureau, that was something that we were involved in, and thankfully for us, the BrightPay software that we use actually did that automatically for us. They updated their software, which made sure that everybody's seen on their payslip they hit the 1.25% increase going towards the NHS health and social care levy. So yeah, next year It's still there, it's still going to be there, but it's just going to be shown just slightly separate on the pay slips. So you will see it. Now the interactive tool, it walks you through a list of multiple choice questions. So this allows you to determine if you are an employee, an employer, or a self-employed individual. So then it's going to ask about your level of earnings and if you have, if you're above or below the state pension age, and then it'll determine if you will or you will not pay the health and social care levy tax in 2022 into 2023. So it's all happening on the HMRC's government website. So again, that's where you would find that. So go to gov.uk and you'll be able to look up the NHS and social care levy guidance tool. Okay, so that brings us to the end of our webinar. So we're going to see if there's any questions. So let me have a wee look at our question box. Okay, so we do have a couple of questions coming in, so let me have a look. So I have a new start apprentice who doesn't have their national insurance number. Can I add them to the payroll without this? Good question. So yes, basically you can. So as I said earlier, the importance of making sure you've got their correct address, postcode, but also date of birth, absolutely essential, especially when you don't have a national insurance number. Add that in, set them up as a new start, and submit them with your first with the first FPS to HMRC. HMRC then will give you an update. You will get a tax notification through shortly after with their national insurance number. So don't panic. Sometimes we're seeing it ourselves. We're getting apprentices coming on board and they've either lost the letter, you don't get the card anymore. I'm old enough to actually have one of those little blue and red cards, but all these new ones, it's a letter that they get. I always tried to make sure I took a photocopy, or I took a picture of my son and daughters so that they would never lose it. I recommend that highly to all parents out there. It's a good idea. So that they don't lose it. So, but yeah, absolutely. Some of these letters aren't actually landing until after they're starting their employment, especially when it is apprentices coming straight out of school that have never worked before. So yep, get them added to your payroll, not a problem, but make sure you've got their date of birth, their full name, full address, and particularly that postcode, because HMRC will use the postcode to double check and cross check the address. So yes, all important. So let's see. So we've got another question. Let me see. I'm a sole trader. Do I have to comply with the pensions regulator? So you don't actually. So because you're a sole trader, you're classed as the business. Now, until you take on employees, you don't comply. And pensions regulator, you would find, wouldn't actually contact you necessarily to get you registered, because you are the business. Changes once you take on employees. So then your employees become eligible. So then you do comply. So it all comes down to at what stage you're at in your sole trader, as to where you are with your responsibilities. So if you were a director of a limited company, then you would be classed as an employee, and therefore there are responsibilities for you to do. Again, as I said earlier, you would register as exempt from auto enrolment. However, once you took on another employee or another director, auto enrolment may apply. However, you need to go to the pensions regulator website to go through. There is again a section in there where you can answer all your questions and see whether you should and shouldn't, whether you do or don't comply, and what duties that you do have to do. So there is a useful tool on the the pensions regulator's website. So please, by all means, go onto that. If you're in doubt, I would always say go to the pensions regulator, even phone them. You know, you can get through fairly quickly these days. So that's all the questions. Before I finish, I do want to say we do have a wee note here from John saying that we are proud. He's proud of myself and Nicole for raising funds for St Andrew's Hospice, because we've agreed, and Nicole and I have agreed to do a sponsored skydive on the 18th of September, so 2 Sundays' time. We're going to be launching ourselves out of an aeroplane. So yeah, I'm looking forward to that. First time for both of us. We've never did this before. So yeah, moment of madness maybe, but it's all in a good cause. So I would please, if you do see any of our posts on LinkedIn or Facebook or anything like that, please sponsor us, because it's for a great cause. St Andrew's Hospice do fantastic work. Benson Wood sponsors St Andrew's Hospice. That is their main charity of choice, and we would love to see more sponsors coming in, because we do have a target to meet, and we're getting there. We're 80, I think it was 89%, so we're getting there. So yeah, absolutely. So that's us. I just want to say thanks very much to everybody for joining me today. I hope you found the webinar useful. If you do have any questions, could you take it to the next slide, Joe, please? We're here to help. So we do have a team standing by to help you to answer any of the questions. We have our own payroll email address, so if you have any questions at all, please don't hesitate to email the payroll team with our telephone number if you wish to speak to anybody. And we've also got the website. There's a lot of useful information on the website, and there's going to be more and more information getting added to the website as we progress the payroll team. So yeah, by all means, jump on the website, contact us, telephone or email. But thanks very much for joining us today, and we'll see you next time. Bye.